What was once considered to be the biggest EV startup failure in history is becoming a story of a lifetime. Fisker Automotive, trading on the New York Stock Exchange, is expected to produce more than 40,000 vehicles in 2023 of its Ocean flagship SUV. The company, once going head-to-head with Elon Musk, is now on track to turn a profit in its first year of production, at least according to its CEO. This has led Fisker's stock to be up more than 30% after reporting earnings earlier this week, resulting in a very stark perspective around EV startups, which are typically considered one of the riskiest investments on Earth. So what exactly is Henrik Fisker, one of the long-lost competitors of Elon Musk, bringing to the table with his newly resurgent Fisker startup? Is the company in a good financial situation, and what is the product that it's offering to the market? Well, those questions are exactly what I want to address in this video. But as usual, guys, before we get into it, make sure to drop me a thumbs up and hit the subscribe button if you haven't already. Yes, you heard that correct. Elon Musk has some big beef with Henrik Fisker dating all the way back to 2007. While Tesla was designing and developing the Model S to be released in 2010, Henrik Fisker was the lead design engineer behind the project. And it turns out Henrik left the company in 2011 and stole a lot of design data that he ended up using for his own startup company by the name of Fisker Automotive. Yeah, you guys remember that car called the Fisker Karma? Well, that company was run and founded by Henrik Fisker, taking on the Tesla Model S and the sports car business for hybrid electric. It turned out after the company filed bankruptcy in 2013 that this was one of the most failed EV projects on Earth. But surprise, surprise, Henrik Fisker has come back with some strong vengeance. Instead of taking the last name of the Karma, he is taking his own last name in Fisker and starting his own company, building off the ashes of what was left of Karma Automotive. Henrik Fisker took this company public in September of 2020 through a special purpose acquisition company, and just a few months ago in November of 2022, he rolled off his very first production Ocean SUV in Austria. For a company that was mired in so much controversy and one that was burning through a lot of cash over the past few years, this is certainly a really impressive milestone. Going into production from a prototyping and design phase is always the most difficult part of starting up a company, and it seems like Fisker has crossed that barrier rather successfully. However, there are some hurdles the company still needs to overcome, and it's important to understand where the product that they're trying to sell will even fit in the North American and European markets, which you might find surprising to be a little bit more complicated than you initially thought. First of all, I have to say that the Fisker Ocean is certainly a super attractive and handsome vehicle. This thing is supposed to target the luxury crossover segment in North America and Europe, which obviously right now is exploding with competition from EV startups and even general OEMs. The range of this vehicle is expected to be more than 360 miles, a 0 to 60 time of around 3.6 seconds, and a base price tag of just only $38,000. And as you can see, that price tag, at least for North America, falls right in line with what you would be paying for some of the traditional OEMs luxury crossover offerings, whether that be from BMW, Acura, Hyundai, or Mercedes-Benz. Now, obviously, as an investor, going off the looks of a product is not the best strategy. You want to make sure the company has the ability to scale up manufacturing, and they're able to do so without hurting its shareholders in the worst way possible. And it looks like Fisker does have some really interesting strategies up its sleeve to counter a lot of the problems traditional EV startups face. And one of them happens to be the fact that Fisker is not building their Ocean SUV by themselves. Instead, they're contracting out the assembly and supplying process of the vehicle to a company by the name of Magna Automotive, which is one of the biggest contract manufacturers of auto OEMs on Earth. Magna actually makes vehicles for Mercedes-Benz, BMW, and Audi, in one of its biggest manufacturing plants in Graz, Austria. This means that the company can give Fisker a lot of technical assistance when it comes to the design, verification, and engineering of their Karma vehicle. Magna is obviously going to charge a fee for every vehicle rolled off the line, but for a startup, this is one of the best strategies you can follow, which is being asset light, making sure you're getting to market first, and then establishing your customer base. And that certainly becomes super important in an industry as competitive as consumer EVs. When you're talking about aircraft, semi-trucks, or even commercial buses, the industry is a lot more set and straight. But when you're dealing with consumers, you are at the mercy of the OEMs and what they truly desire. You have to truly attract the attention of the consumer and make sure that they're confident and passionate about the vehicle that they're investing in, especially one that is obviously going to be more expensive and going to have more drawbacks than its conventional ICE competitors. From what I read about the company, one of the driving factors behind the design of the Fisker Ocean is their very sustainable processes of manufacturing and designing the interior of the car. Apparently, they use a lot of sustainable resources like wood and fake leather to give the ambiance of luxury without actually hitting on carbon emissions and the environment. And I'll be honest, with the trends I'm seeing in the ESG industry, that is certainly going to be a big purchasing factor behind a vehicle from Fisker. Believe it or not, people do care about their emissions and impacts on the environment, and I certainly think that's going to help Fisker's overall appeal to the mass market. And what's really interesting is that even from a business and financial perspective, the company seems to be weathering the current recession quite well. The reported total operating expenses and capital expenditure for 2022 to be around $702 million, which obviously was well below their guidance range of $715 to $790. The company also seems to be a lot well established from a cash position than some of its nearest competitors, with cash of almost $740 million. But I'll be honest, no matter how good the fundamentals of the company look like today, starting production is always a very difficult process. And the projections that Fisker has made for fiscal year 2023 are extremely surprising, to say the least. As you can see right off the bat, they're saying that they expect to spend less money this year when they're manufacturing and ramping up production than last year when they were primarily doing R&D, marketing, and product homologation. And they expect a positive gross margin for the year sitting between 8 to 12% and potentially positive EBITDA, which is essentially earnings before interest, tax, and depreciation. And this is where things start to make not a lot of sense. If you look at some of the recent IPOs on the market in the EV startup space like Lucid Motors, even after more than 4 quarters of production, their gross profit is still in the negative and actually increasing. You can see that their revenue has exploded from less than $30 million to more than $195 million. But that does not necessarily translate into gross profit. And that makes sense because the company right now is barely selling any units compared to what it's going to be selling in 5 years' time. That means the cost of manufacturing each vehicle is going to be high, and that naturally means their cost of goods sold are going to be higher than their actual revenue on each vehicle. Even the Amazon-backed Rivian currently reports a negative gross profit and a negative EBITDA on a GAAP and non-GAAP basis. So it's extremely enticing to see Fisker report its projections about being positive on both in their own financial year of production. This is either a massive red flag or something that Fisker might be hiding up its sleeve. Maybe their Magna deal is actually a lot smarter than Wall Street had initially priced in. Maybe their idea of contract manufacturing is so lean and so efficient that they're going to be able to turn a profit on each unit they sell in their first year of production. And it's not like they're setting any easy target for production this year either. They're saying they're on track to build more than 40,000 Fisker Oceans in 12 months with a first monthly run rate of just around 100 vehicles. That means Fisker expects to only build around 700 to 800 units in the first quarter of 2023, meaning in the second, third, and fourth quarter, their production is going to ramp up at an exponential rate to reach that 40,000 target. I don't know about you, but that target seems excessively out of reach and potentially signals at the lack of understanding from Fisker's management team about the financial situation the economy is headed this year. Even big automakers like BMW, who lend out a lot of their contract manufacturing to Magna, don't make north of 10 to 12% gross margin on their products, and that is after more than 50 to 70 years in mass production. Right now, Fisker's built around 56 production vehicles from their Graz factory, with around 15 of them going to Magna for fleet vehicle testing. A lot of those vehicles are going to go for SQA processes, homologation to certain regulations in North America and Europe, and obviously into ramp-up planning for the second quarter ramp. And simultaneously, they're expected to work on their 29,000 MSRP vehicle called the Fisker Peer. What do you guys think? Is the Fisker Ocean a competitive product? And is Fisker going to succeed as a big EV player? Let me know your thoughts down in the comments section below, and I'll catch you guys in the next one. Take care.